Hey everyone, happy Wednesday. Welcome to our weekly live call. Come on in, tell us where you are joining from. We're excited to have you here. It's been 2 weeks. We were not here last week, so we're glad to be back and to cover the topic that we planned to cover last week since it is Financial Literacy Month, April. And so we're going to talk about 4 financial literacy basics that we all need to know. Very important topic. Even if you think you know it, it's always good for a refresher. And so if you are just joining us for the first time, my name is Bola I'm the founder and CEO of Clever Girl Finance. And my amazing co-host Yazmir will introduce herself.
Hey everyone, I'm Yazmir. I am one of the content creators for Clever Girl Finance, joining you from New York City.
Yay, awesome. Yazmir Analyst is in New York City.
Oh my gosh, that's so great. Which part? I'm in the Bronx.
When she responds, we'll see her answer. But welcome and thank you so much for being here. So as usual, we have our announcements, and I was just telling Esther, so you guys know who Esther is. She's part of the Claro Finance team. You see her very often on here. That I never mentioned the fact that we have one-on-one coaching, and people ask us about this all the time. So I wanted that to be the first announcement that I make that Clever Girl Finance offers one-on-one coaching around personal finance, and you can learn more about that on that link. You can see all the details. Coaching is typically with Esther. She's a certified financial coach. And so if you are interested, please stop by, check out that link. I'm going to start mentioning this now. We also have over 30 plus completely free courses and over 40 plus completely free worksheets. If you are just getting familiar with the Clever Girl Finance platform, we have tons of courses, worksheets that you can download. And then when you sign up for a course, you can also schedule a 20-minute overview session with our Clever Girl Finance mentor, Anita. And our blog gets updated every day. We have hundreds and hundreds and hundreds of articles on the Clever Girl Finance website. This is a really, really huge resource. So please check it out. And Yasmer, Analyst says she's in Bushwick. Bushwick.
Is that like?
You guys are Caribbean sisters. I love
Yeah.
it. Yes, we are offering coaching. So please check out the coaching package that we offer. I always fail to mention that people ask all the time, like, why haven't I was telling Esther yesterday, why haven't I mentioned this on our live? So yeah, check it out. And of course, we have the books, Clever Off Finance books. You can pick up these books everywhere books are sold. The foundational Ditch Debt, Save Money, and Build Real Wealth, the investing book, Grow Your Money, the side hustle book, and of course, my recent book called Choosing to Prosper. So you can get these everywhere books are sold, audiobook, ebook, and you could also ask your local library to order the books as well. We have our planners, the Clever Girl Finance Life and Business Planners on the website. So we have tons of really great stuff. So please check it out. And of course, my t-shirt, my mug. These are all in the Clever Girl Finance shop. So stop by the website, browse around, and get familiar. Hi, Stacy. We were not here last week. We had to cancel that last minute, but we're back. Hello from Oklahoma. Hi, Portia from the land of milk and honey. So thank you for joining us. Welcome, welcome. We are excited to be here. And as I mentioned, our topic today is 4 financial literacy basics we all need to know. Whether you know them right now or not, perfectly fine. There's no shame, no judgment in what you don't know. We're here to learn. And if you know them, this is always a great time for a refresher. So I'm going to hand over to Yasmin so we can get into the topic.
Yes. So for those who don't know, April is Financial Literacy Month, so there's a lot of emphasis this month on teaching people financial literacy because it is one of the foundations for building wealth. So we're going to talk about some basics today that everyone should know, and like Bola said, like if you don't know this, no shame, and if you do, this could be a refresher. Also, feel free to ask any questions or let us know what you do in your life to sort of like organize your personal finances.
Yes, so we can start going into the topic around financial literacy and basically what it covers.
Mhm. Yes, so that entails budgeting, banking, investing, and handling debt so that you can plan for the future. So, the benefits of having financial literacy is that you'll have the skills to pass on to your children. You yourself have the ability to reach your financial goals. It can help you reduce unnecessary expenses. It'll give you less stress and anxiety about money, and just overall have better money management.
Yeah, so having that good sense of financial literacy, understanding all the areas it encompasses is really important because it helps you just really get clear on what you want to accomplish and be sure that you are doing the right things to make sure you have your full financial picture covered. So Yasmer said, she just mentioned what it covers. It covers your budgeting, your banking, investing, paying off debt, planning for the future, building generational wealth. These are all things that all fall under the umbrella of financial literacy. These are all things that you want to be familiar with, right? And if you want to pass down generational wealth to your children or generational knowledge, you have to have a firm handle of financial literacy. You want to achieve your financial goals. You want to reduce your expenses. You want to have less stress and anxiety about your finances, be able to manage your money better. This is so important, right? I think sometimes people minimize the importance of that broad financial literacy because there's just a focus on budgeting, or there's just a focus on frugal living, or there's just a focus on paying off debt, or there's just a focus on investing. But it's a whole big picture, and you want to confidently know that you are familiar with every aspect of financial literacy. And I also wanted to highlight that when it comes to financial literacy, there is no level to it. There's no tier to it, meaning that it's applicable to you regardless of where you are, whether you are earning a low income, whether you're earning a high income but you're struggling to manage your money, whether you are starting over with your finances, whether you are trying to do better with your finances, recover from money mistakes, you've gotten a lump sum of money, you're navigating a divorce, you're navigating a job loss, you're trying to come above the poverty level. Financial literacy is applicable to you no matter the level you are at. It is not for rich people. It is not just for college educated people. No, anybody can leverage what financial literacy has to offer to create the life that they want for themselves. So when it comes to financial literacy, like, eliminate any bias that you have felt around it. You have a right to know it. You have a right to leverage it, and you have a right to use it to create the life that you want for yourself.
Mhm. Yes. Great point, Bola. And with that, we're going to talk about four financial literacy basics today.
Dahlia is making me laugh. She said last week she thought she was having a senior moment because she couldn't find the live. That was
Oh,
our fault. Sorry. And then, sorry, the King's Bride said, "Is there a group?" Yes, we have a Facebook group. Once you sign up for one of our courses, or you can just go to first Facebook group and search Clever Girl Finance. Okay, sorry, Yasmir.
no worries. So we're going to get into four financial literacy basics. The first one is the use of credit and debit cards in a smart way. So debit cards and credit cards, they're very convenient because you can just use them instead of cash. You don't have to worry about carrying cash with you. But there are important differences that people forget about or they don't even realize. So debit cards are linked to your checking account. So when you use a debit card, the sum of the amount that you're purchasing is deducted from the balance in your bank account. So whatever available funds that you have, like, that's it. So if you have $2 and you're looking to buy something for $10, like, you can't, you're gonna get overdraft, which you want to avoid because of the overdraft fee that some of these banks have. And credit cards, there is a maximum limit that you're given that you can use, but this is borrowed money. So when you use a credit card, you will then have to pay it on the due date, and you have to pay it in full because any balance that's left over will get charged an interest rate.
Yeah, so a really important aspect of financial literacy is understanding how to use your credit card, your debit card in a smart way. Having a credit card is not a bad thing. Credit is not a bad thing, regardless of what you might hear. It is simply a tool, right? And the issue comes from how this tool is used. It's like you have a knife, you can use the knife to cut up your vegetables really nicely to make a nice meal, or you can use the knife to cut your hand, right? It's not the knife's fault, it's the way the tool was used. So
Yeah.
when you're thinking about debit cards and credit cards, eliminate the negativity from it and just look at it as a tool. And so how do you leverage the tool in a right way, in a smart way? Your debit card, you want to make sure that you're planning, you're budgeting based on the money you have in your bank account, because every time you swipe your debit card, the money is immediately debited from your account, right? So you're using that debit card almost like it is a form of cash, but it's a card, and every time you use it, money is deducted. So you want to budget accordingly so that you're not overspending, you're not bouncing checks, you're not unable to pay bills because you're not using that debit card in a smart way. So again, a tool. The same with a credit card. We're living in a world where it is almost necessary for everyone to have a credit card, right? Whether you're using it for fraud protection, whether you're using it to book to pay for online purchases, pay for online travel, whether you're using it to pay at an establishment that does not accept cash. But you want to be mindful that as you're using credit, it's tied into your spending in your budget. So you plan to spend $200 buying things online, you're using your credit card because you're going to get points, you're going to get miles, whatever, that's fine. But knowing that this is what I budgeted for, so that when you get your paycheck, you can pay that $200 back to the credit card company because it's not your own money. So when it comes to financial literacy, when we say use credit and debit in a smart way, I want you to change your mindset about what credit is. Because a lot of times people will say, oh, credit is evil, credit is bad. Um, and as a result, you're not thinking about it objectively. You're not thinking about how to budget when you use it. You're not thinking about how you spend mindfully so you can pay your balance off in full every month. Instead, it's this fear thing where you spend it and you run away, or the bill comes and you pay and you run away. But it's compiling interest there. It's costing you money. So you want to be mindful of how you use it and look at them as tools, right? It's sometimes it's difficult to detach your emotion away from these tools, but you always want to try to be objective about it first. So the first tip is using credit and debit cards in a smart way. That's really key uh, when it comes to your overall finances.
Yes, and I love that you mentioned that they're tools, because a lot of people are very, very afraid of, like, or even applying for a credit card or looking at their credit card balance. But there are benefits that are good, but as long as you're using them a smart way, you're using it and you're paying it off at the end of the month.
And again, it's also being mindful of making 10 applications, right? What is the purpose of having a store card if you can only use it to shop at that store? I'm not saying don't open your store card, but they might be giving you a specific discount, specific offer every time you use the card. But is this taking you off of your path for your financial goals? Are you able to pay that bill in full, right? You want to be mindful of, do you need to have 10 different store cards, right? You don't need to have Macy's and Bloomingdale's and Nordstrom and Lord and Taylor,
Yeah.
right? Like, what is you want to think about what is the objective here? What is the point here, right? Because at the end of the day, those store cars are cars that are limited to you shopping in that store and tied to you buying assets that really have not assets, items that have no value, that are not assets, right? So you can only use your Macy's card to buy a limited number of things. You can buy some towels, you can buy a dress, you can buy some perfume.
Mm-hmm.
None of these are going to appreciate in value. And so you want to be very careful, especially because it can be enticing to want to, every time I go to Target, you want to open the Target credit card and get, what did they offer me? 10%, 5% off my offer. I was somewhere recently paying for something very minor. I was buying my kids' clothes at Children's Place or Carter's, and they offered me a credit card. And I'm like, you can save 20%. And I'm like, wait a minute. So if I open a credit card at every single store I go to in this mall, how many inquiries is that? And it's all to buy a bunch of junk clothes that my kids are going to outgrow. I don't think so. So you want to be able to see past the hook that they use to reel you into
Yeah.
these offers.
They do. I always decline. They, oh
Yeah,
gosh.
I don't even. I sometimes I don't. I act like I don't. I didn't even hear you ask me the question.
Yeah, no, just avoid it. Avoid it if you can. Not that they're bad, but you don't want to have like so many of them. And
So
then
Annalise brings up a good point. She said it's very important to remember by the company's rules. I once paid off my balance like 10 days before the payment due date, and my credit score dropped 40 points. So that's not necessarily because you did anything wrong. It's because of the reporting cycle to the credit bureaus that is used to calculate your score. And I believe one of the I don't want to mistake this, but basically the timing as to when you pay off your balance matters, right? You want to pay it, I guess, at the due date, because when they report it, if you've paid it off in full, they're always going to report a zero balance, which is going to show no, like, because your use of credit is what helps to create your credit score, right? And when the company is reporting it every time with a zero balance, it's like, well, there's no use of credit. And because you don't have that use of credit category, credit history category, you may see your score decline. So the timing of when you pay your bill matters, even if you're paying your bill off in full every month, right? So let's say I have a credit card and I put $300 on it today, but my bill is not due until April 30th. I could pay it off tomorrow, but I want it to showcase that I have use of credit and responsible use of credit. So I'll wait until April 30th to pay it off. And when I pay it off on the due date, I'm not charged any interest, and it's not going to impact my credit score. So just something to keep in mind.
yes.
I see questions. Okay, we'll answer this one and then we'll continue with the points and then we'll come back to the questions. So Jennifer, you said I'm in the process of paying off debt. I have 3 credit cards. Should I cancel 2 of the credit cards and keep only one in order to balance my budget? I would say don't cancel them. Just stop using them. You can put a lock on your credit card if you log into your credit card account. You can freeze your credit card with a lot of companies let you just call them and put a freeze in it so you can't use it and nobody else can use it. And the reason why you don't want to cancel them or close them is because you don't want to lose the associated credit history tied to those cards, because when you do that, it can temporarily impact your score because you're losing months or years of credit history that are an important part of your overall credit score. Okay, so let's keep going, Yazmir.
Yes, that's a great question. So the second financial literacy basics is know how to take out loans. So many of us take out loans for large purchases, such as buying a car, making home improvements, or paying an emergency bill. But it's important to understand how these products work and also the things that you have to consider. So one of the things to consider is APRs. APR stands for annual percentage rate, and it refers to the amount of interest you'll be charged on an unpaid credit balance. So, these rates can vary, so it's very, very important that you pay attention to this percentage before or when you're applying for a loan.
Yes, so understanding how to take out loans. So just to go back to the beginning of this session, we're talking about credit basics that are typically we're talking about financial literacy basics that are typically overlooked. Like we all know, save, have an emergency fund, create a debt repayment plan, invest for retirement. These tips we're sharing are financial literacy tips that are typically overlooked. So the first one we shared was use your credit and debit cards in a smart way. And now we're talking about know how to take out loans. I find that a lot of times people only really pay attention to the interest rate on a mortgage, for example, right? Because that's a long-winded process qualifying for a mortgage. And typically you get talked through that process with your realtor, with your bank, with your mortgage broker, your loan officer. You get to know, okay, I'm getting $100,000 mortgage at a 6% interest rate. This is what my monthly payments are going to be. This is what the amortization schedule looks like. This is what I'm paying in interest. That's typically when people are paying attention. But when it comes to other types of debt, people, they kind of like glaze over it. Like a lot of people, I'm sure many of you on this call cannot tell me exactly what your credit card APR is. You just know it's like 15 or 16%. It's like 7 or 8%. Oh, I'm not sure. Oh, I haven't checked. And important to know what APR is, and not just know it, but understand what it's costing you in terms of how it's compounded. It is one thing to have an APR on a credit card that's compounding monthly, and another thing to have an APR on a loan that's compounding weekly or daily, right? These these are, so. For example, if I have a loan that has a 5% APR and it's compounding every day on $1,000, it means that today I owe $1,005, 5%, right? Is my math right? I don't know. Oh God. What is 10%? What is 10% of 1,000? Okay, $50, $1,050. Okay. Then tomorrow it's gonna compound on that $1,050. And then the day after tomorrow, it's gonna compound on the $1,050 plus the compounding of yesterday. That's gonna cost you a lot more than if it just compounded once a month at 5%, right? So you need to know what it's costing you. And there are calculators online that you can just quickly go in and put in how much is this credit card costing me based on my APR. You want to understand it. Goal is, when it comes to APR, the lower the better. As low as possible is best for whatever it is that you're purchasing. And then for your existing debt, if you're thinking about how to create a debt repayment plan, go look at the APRs and say, okay, I'm going to focus on paying off the debt that's costing me the most amount of money based on that interest rate and based on how it is compounding. You also want to look at other types of debt that you may not realize is having interest associated to it. For example, if there's any medical debt involved that's been sent to collections, they may be charging you interest in addition to late fees and other types of fees. So you want to be aware of what all these small fees are, because they are costing you money. So, okay, some people said that they know what their APRs are. Yes, good. I love that.
So important.
Yes, yes.
So another thing that's tied to loans, and it's important to know how they work when we apply to them, are credit scores. So while you have to be careful when using credit cards and loans, the good thing about them is that using credit cards, especially, will help you build strong credit history so that lenders see that you are a responsible consumer. But failing to make your payments could damage your credit history. And then the lender will check your score. So if it's typically the score is 300 to 850. So the higher the score, the more favorable you look to that lender. The lower the score, you might not look so favorable. And it also factors into interest rates. People with higher credit scores tend to get the lower interest rates, while if you're in the lower side, you can get approved, but with a much higher interest rate.
Yes. So understanding how your credit works is important. You don't need to be a credit guru, but you need to understand the basics, right? And it's really important to pay attention to your score and also pay your bills on time. When it comes to credit, the bottom line is paying your bills on time. A lot of times people think that credit is only associated to the loans that you have. For example, you're paying your mortgage, you're paying your car note, you're paying your credit card, you're paying your student loans. These are loans that are actively being reported as active debt on your credit report that you see. But the truth is that there is debt that if you don't pay, if you become delinquent on, even though those favorable payments, on-time payments, are not reported on your credit reports, once it becomes a debt collection situation, that will get reported on your credit. So for example, let's say I stop paying my phone bill for the next 3 months. They're never going to say, oh, Bola paid her phone bill for 10 years. Immediately it becomes a debt to collect. They will report it as a negative remark on your credit. So that's where the issue with medical debt being reported on your credit, etc., comes into play. So anything that's going to collections that is now converted into a debt is going to get reported. So you want to pay attention. So many people don't know their due dates, and this is for their different bills. And this is as simple as getting an Excel spreadsheet, putting reminders on your calendar so you're aware of your due dates. What are the due dates that you have to pay your electric bill, your water bill, if you pay a water bill, your phone bill, your credit card bill, your student loan bill, whatever, your mortgage, insurance. Put all those dates on your calendar. Create a spreadsheet so that you can pay them on time or automate them. And another thing is that when it comes to service providers, for many service providers, so I know for mortgages, for certain types of loans, for certain services, you can call them and say, listen, I would like to move my due date to this date. And a lot of times they will move your date as long as it's not beyond 30 days of the original date. So let's say it's easier for you to pay all your bills due on the 15th, and your bills are due on the first, second, third, fourth, fifth, sixth, seventh, sixth, and seventh. You call them, and many of them will allow you to move your due date to the 15th or to the 14th, so that you just know that, okay, every time I get paid, I'm going to pay all these bills at once on this due date. For some people, it's easy. For me personally, I don't care what the due date is. I can have a due date every single day of the month. I put it on my spreadsheet. It gets paid. It doesn't bother me. But for some people, it does. It causes like overwhelm, and that's okay. It's fine. But it's all about making it easy for yourself to stay on top of your bill, so that you don't get these negative remarks being reported for no reason, especially when you do have the money to pay. You do not have the money to pay, different situation. But again, you can get ahead of it by calling your lenders, your service provider, and say, hey, listen, I'm struggling this month. I lost my job. I'm going through a financial situation. Can you help me? Can you defer my payment? Can you put me into a certain type of payment plan? A lot of service providers, lenders have these options, especially given what we're coming out of, which is the global pandemic. And many of them will work with you. And if they're willing to work with you, that means it delays any derogatory remarks being reported on your credit, because they've seen that you're taking action to resolve the situation. You've gone into this plan, and they will not make those reports unless you default on the plan or the agreement you have made with them. So it's really important to ask. It's really important to ask for support.
Yes.
So someone just mentioned they defer but do not have control over the reporting companies. That's, it depends on the company. There are companies, especially that you reach out to them for support, and if they put you into a deferred plan, right, they will not make the derogatory remarks to the credit companies. Some of them will still anyway, even if you are in a plan. It depends on the lender or service provider. So this is a case by case basis, depending on who the lender or service provider is.
Alrighty. So that the third financial literacy topic you should all know is investing funds for the future. So once you grasp the basic of financial literacy, so it's how credit cards and loans work, you want to start to look into investing. So there are a few options that you can explore. One is probably the easiest because it's available if you're working, is to invest into a 401k or a Roth IRA plan. Many employers, as a benefit, they offer 401ks, where a portion of your money that's pre-tax is going to go into the account and it's going to grow tax-free until you retire. The Roth IRA works differently, where it's just your money gets taxed and it goes to the account, it grows, and then when you're ready to retire, you can withdraw it tax-free because you already paid the taxes on those. So that's a good first place to start. If your employer doesn't offer Roth IRAs, you can open one yourself. I see employers more and more offer the Roth 401k. But again, if that's not available to you, you can open it on your own. There's real estate. This is a good way to build wealth. Just be ready to work a little bit here, whether it be hands-on or you're working with property managers. And then invest in the stock market, which is you putting in money into stocks or index funds, ETFs. That money grows in there. You can withdraw it anytime. These are good for like midterm and long-term goals.
Mm-hmm. Yeah, so investing for your future is important. And this is the financial issue basic that everybody knows, right? But there are different ways to invest. There are different avenues to invest. It's so many people only think that they can only have a 401k. So this is a US based retirement savings plan offered by employers, I mean. But you can have a 401k and a traditional IRA and even a Roth IRA. You're allowed to have one of each type of retirement accounts, so you can have them as long as you meet the qualification guidelines, right? You have to be employed to participate in a 401k. Only employers offer them. Traditional IRA, you can open one. The Roth IRA, I think it had income limits. I don't know if that has changed. I haven't kept up to date with that, but you can find all of that on irs.gov. So investing for retirement is great. And people always say, why should I invest in a 401k? Why should I invest in an IRA, traditional Roth, whatever, when I can just put my money in a brokerage? The reason why is because of the tax advantages, the tax benefits, right? So as Yazmir mentioned, with the Roth, you pay taxes now. In the future, when you withdraw, you don't pay taxes. Taxes are a big deal when it comes to how much you're able to invest, and when it comes to how much you owe the government, right? When you invest in a 401k, the money that you would otherwise pay in taxes today if you did not invest all gets invested, and it can get invested for decades long, decades and decades, which means that when you do eventually take out the money, most people are not taking out all their retirement savings on the day they turn 65 or 70 or whatever, right? They're taking out based on a certain amount every year, which means you're only going to be taxed based on the tax bracket that certain amount falls into, which means that if you're able to invest tax deferred, you're actually able to take advantage of all that money being invested as opposed to getting taxed on it now. And you can even minimize your taxes in the future by how much, depending on how much you take out a year. We cannot predict future taxes. I don't know what taxes are going to be like in 10 or 20 years, but you can take advantage of that tax deferred opportunity to invest all that money as opposed to having your money taxed because you're not investing when you get paid in your paycheck, right? So it's just something to think about. And then investing in real estate, not for everybody, but this is another way that you can diversify your investments to build wealth. There are so many ways to invest in real estate. You can invest in real estate investment trusts where you can create a brokerage account and invest in companies that invest in different types of real estate, right? You can invest in commercial property, residential property, farmland, resorts. There's so many types of ways to invest in real estate, car washes, laundromats. The bottom line is to look at the research, know your numbers, and focus on either appreciation as your investing path or positive cash flow as your real estate investing path. And then the third thing Yasmin mentioned was investing in the stock market, right? Again, that's where your 401k money goes. If you have a brokerage, that's where your money goes. Obviously, we're in a down market right now. You're going to see all kinds of swings and fluctuations throughout your life of investing. But historically, over the course of the life of the stock market, with inflation, the average rate of return is 8%, right? Sorry. Excuse me. There are years that you're going to see really high returns, 30%, 40%, whatever. And there are years you're going to see negative returns, but historically the average has been about 8% after inflation, about 10% before inflation. And so that's almost like knowing that, okay, I can think about getting 8%, because what other investment right now can you put your money in without having to do a real heavy lifting hard work that's going to give you 8%, right? Your average bank account is giving you 0.0 something. And even now with interest rates going up, you're seeing banks, especially online banks, offering better interest rates. But they're offering better interest rates because the cost of living is also very high. Inflation is very high, right? So you definitely want to think about ways to invest. And I see people leaving comments. So Dahlia said, yes, retirement is not an event. Some people spend more time in retirement than their working years. Yes, I read a statistic somewhere that the average retirement window is 25 years, right? That means even if, so people say, even if you start investing late, even if you start investing at 50, 55, 60, and you retire at 65 and you're still working, your money still has 10, 20, 25 years to grow for you, right? So retirement is not an event, right? This is money that you can invest and still grow. Even if you're older, you can pass it on beyond the 25 years to your children. So it's investing is, it's never too late to start to do well with your money, right? Because you don't get to retirement age 65, that's what is deemed retirement age, and drop dead, Most people live another 25, 30 years, right? So that's a long time. It's a long time for you to, still put money aside. And most retirees don't sit down all day and watch TV unless they have a significant health issue. Many retirees actually have second careers, hobbies, side hustles. They're out and about living a second opportunity at life. So keep that in mind. I hear a lot of people saying, oh, it's too late for me to invest for retirement. It is not too late, right? Even if you're still going to be working while you're retired, you still have an opportunity to put money aside for your next 10 years, for your next 15 years, right? And speaking of that, I'm not going to harp on it too much, but next week we're going to talk about how to make financial strides in your 40s, 50s, and 60s and beyond, because we got that as a request. So it's just something that, investing is not again, similar to what I mentioned earlier. There's no tier to investing. It's not just for people who are 20, people who are 30, people who are this. No, if you are able to invest, you have the spare cash to invest after you've met your daily financial obligations, you want to do it. So I'm just looking through a few more comments here. So analyst said, I have all my investment accounts, both types of IRAs and a few brokerage accounts on automatic deposits. Even with small amounts, when it's consistent, it adds up. Yes, it does add up. The $5 every week, the $10 every week, the $100 once a month, it does add up, especially with the power of compounding, appreciation, and by earning dividends. And I just wanted to go back to a comment I saw from Farida for us around APR, right? So one of the things that Yazmir mentioned was basically your APR is the percentage rate associated to your unpaid loan balance assigned to your credit cards, right? Typically, and they vary. So a lot of people right now are seeing that as feds have increased rates, their debt has become more expensive because their APR has gone up. So you want to pay attention. If you have credit cards that have balances on them, go and check the APRs and see if that debt has become more expensive, right? There was a recent Fed hike, which means in the next weeks, months, you may see changes to your APR. And Farida defined it great. APR is the cost you pay each year to borrow money, including fees, presented as a percentage. It changes as the market dictates. So it's really important to stay on top of it. When you have a mortgage, you know that, okay, I have a fixed rate mortgage of 5% for the next 30 years. You know that. You don't have to worry about it. People pay attention to that because they had that, like I mentioned, you've had that full exposure during the mortgage application process. But with credit cards, people tend not to. It's kind of like, yeah, right? Because there really is, nobody sits down with you and says, let's go over how APR works. Let's go over what happens when you don't pay your credit card bill. Let's go over how interest is compounding. You get the offer online, you apply, approved, and they send you a pretty card in the mail. Sometimes you can design it. Don't fall for the gimmicks. The bottom line is that they want to keep you with a balance so they can make money off of interest. Hi, Mary. Okay, so we've talked about using credit and debit cards in a smart way, knowing how to take out loans, understanding how loans work, APRs, credit cards. We've talked about investing funds for the future, and then we're going to talk about the fourth tip.
Yes, this one is very important to do, and that is to create financial goals and plans. You don't want to live life just saving money and not having like plans for it. So this will allow you to start taking charge of your money by saving, investing, and budgeting. So it's important that you know where you are with your money. You can do this by creating short-term goals, medium-term goals, long-term goals. Long-term, like an example of that is like retirement. Medium-term is buying a house in 5 to 10 years, and the short-term is saving up for a vacation next year, something like that. But no matter which goals you use, just write them down, because if you don't write them down, it's like you're not going to remember them, and put them somewhere where you can see it just to remind you. And also create a timeline, because this will sort of force you to work towards your goals and your plans. So just determine for yourself what you need to happen and by when.
Yes, so it's really important to set financial goals and plans. The one thing that is so important to remember is that no matter your financial situation, whether you are not earning an income, you're earning a low income, you're living on the poverty line, you are in a financial bind right now, you've lost your job. The one thing that you have within your control that nobody can take away from you, even if you don't have the money right now, is your ability to, number one, adjust your mindset, and number two, create your goals. Nobody can tell you not to create a goal. Nobody can stop you from picking up a pen and writing out what it is that you want to accomplish for yourself. And by setting those goals, once you get a little glimpse of opportunity, you get a little bit of extra cash here, you're able to get assistance in one way or the other there, you're able to get a new job there, you can start to take action based on the goal, the intention you have for yourself. The reason why people stay stuck is because they don't set goals, they don't set intentions. You get caught up in this negative mindset, and it's easy to do, right? Nobody is beyond this. Sometimes I get caught up in a negative mindset, but you get stuck in this place that even when the opportunity presents itself to you, because you haven't really gained that clarity on what it is that you want for yourself, the money finds its way to dissolve into other things, right? And I'm sure everyone can share an experience where when you did not have goals, when you were not clear on where you wanted to see yourself with your finances, where you wanted your life to be, the money came and you just did whatever, right? You didn't have a goal to retire early, to pay off debt, to save, to do this, to do that. And so the money came and you just spent it because what was the point of putting it to anything else? Because you didn't have that anything else assigned, right? So having those goals, setting those intentions are so important. Do not minimize the importance of having goals, right? Goals are relevant whether or not you have the money, whether or not you're able to take the immediate action, because when you have that goal in place, once that little trickle of money comes in, once that job opportunity comes in, once the money lands in your bank account, right? You're like, okay, wait, I got this money. What is my goal? You already default back to what is my goal. So it's really important to have goals. They are really important. They're foundational to you being able to succeed. There are so many people who have money and they make so much money, they've earned so much money, they've been given so much money, and every single time it has slipped through, they cannot account for it because they had no goal, they had no intention, they set no plan. Then on the flip side, there are people who are coming from nothing. They're coming from just serious lack, and they set goals and they get some money and they're able to turn that $1 into $100, that $100 into $1,000, that thousand into 10, into 100, because they're intentional, they had a goal and they're able to apply it. So it's really important to keep that in mind. You want to have your goals, even if you don't have the money to take action on them right now. Nobody can take this away from you. You may not have the job, you may not have the income coming in, you're trying to figure out how to keep your head afloat right now. But the one thing you can do that no one can dictate is set your goals, set your intentions, put it out there so that you know what you want to start working towards. So I'm going to answer a few more questions. We can answer a few more questions. I see one here. And then Chrissy says, does the IRA yearly max include traditional and Roth IRA? Yes. So each of these accounts has maximum. You can find it on irs.gov. But for 2023, the traditional IRA and Roth IRA, their maximum contribution limits are $6,500, and the 401k limit is $22,500. Let me see what other questions there are. More comments. So Evelyn said, I wrote my credit card APR information by printing out the debt repayment worksheet from the Clever Well Finance worksheet. Taking the classes helped a lot, so I can see my progress in paying off. Yes, so we have a debt repayment worksheet as one of our 40 plus worksheets that you can use to kind of get organized and create your debt repayment plan. Okay, so Patrice says, what are some practical steps I can take to stop charging on my credit cards? I know how to pay it off, but not how to resist the spending temptation. Yazmir, do you want to take this one?
Yes, there are multiple steps that you can take. One of them is just don't bring all your credit cards with you. If possible, just take your debit card and use that. You can, like Bola mentioned earlier, you can call the credit card company and ask them to freeze your credit card so that when you use it, like you can't. What are some other things? The big one is just what we just spoke about, is remembering your why, your goals, your plans for your money, and just thinking about, okay, so if I make this purchase, which is not necessary, I'll be just one step behind in my goals. So you gotta like start practicing thinking that way every time you want to make like an impulse buy, or something like that. And if you do, you can always return it. A lot of times we do like emotional shopping. We do shopping to like soothe us. And it's just replacing that habit with something else, whether it be walking, reading, doing something that you like.
Mm. And I would also say help yourself, right? It can be really hard to resist temptation, right? Everywhere you turn your head to, Siri is listening on the phone. Chat GPT, whatever, is monitoring your whole life, and they're looking at what you like, and they're presenting to you on Instagram, on Facebook, on TikTok, on Twitter, everywhere you go. Then the girl at the store is like, do you want to open a credit card so you can get 20% off? So help yourself, So freeze those credit cards so that the next time you try to use it to pay for something online, it gets declined. And you know that you froze it, and you can easily log into your account and unfreeze it. But that initial moment will give you pause. Wait a minute, I'm trying to buy this and it got declined, and I have the available balance to buy it, but I froze my credit card for a reason. Why? So you pause there. So by doing that, you are helping yourself kind of like work on that resisting spending temptation muscle, because sometimes it can be difficult. If you're using your debit card, maybe you only keep the amount for your bills due in that card, in that bank account, and anything of excess you shift it into a savings account that doesn't have a check, doesn't have a debit card. That way you try to use the card, you're like, wait a minute, I need to pay my rent, that's all I have. And then you say, but wait, I have money in this extra account that I can easily transfer. But because there's that one extra step, you have the opportunity to ask yourself, well, but why did I put that money there? Because I'm trying to save for this, because I don't want to spend everything. Give yourself moments to pause and ask yourself, but why? Right? And that can also help. And having accountability, having someone who can like be like, girl, no, stop it, don't do it, can also be helpful as well.
Mm-hmm.
So that's what I wanted to talk about. When it comes to financial literacy, there's a lot of things that you should be doing, right? Saving for emergencies, having a budget, paying down debt. But these are things that are sometimes overlooked. Dahlia said, oh my God, that phrase, help yourself, help yourself. I need to remember that when I pass Brown's shoe store. But again, so just to go over the points we mentioned, use credit and debit cards in a smart way. This is to help you avoid overspending and help you avoid getting charged interest you don't necessarily need to pay. Just think about these as a tool, right? What is the purpose, and budget around using your debit and your credit cards. Because when you're not spending cash, it's easier to detach the actual money from the card. Two, know how to take out loans. Be mindful of interest rates. Know what the APRs are on your credit cards. Know how your credit score is how it works, how it's impacted. We have articles on all these topics at clevergirlfinance.com. Invest for your future. Take advantage of tax advantage retirement savings accounts. If you're interested in real estate, start to explore what is interesting to you in the real estate perspective. Invest in the stock market with brokerage accounts. Invest in businesses that you believe in. Do your research always. And then finally, create those goals and plans, right? Sometimes we see goal setting as just another thing to do, but it's something that can really guide you and keep you focused, especially during those times when things are difficult. So you remember that there is something to work towards, there's something to be motivated towards. So I hope you guys have found this session helpful for Financial Literacy Month. And like I mentioned, next week we're going to be talking about financial actions to take in your 40s, 50s, and 60s and beyond. It is never too late to achieve financial wellness. It is never too late to be successful with your money. Hi, Nafisa. Long time no see. And so that's our topic next week. So don't forget to check out the coaching. Like I mentioned, Clever Girl Finance, we offer coaching. I don't know why I don't mention this, but I'm going to start mentioning it now. Check out the books everywhere your books are sold. Ugh, falling off. And then my most recent book, Choosing to Prosper. Check out our courses. Somebody asked about what courses we have. We have over 30 plus courses, cleverwellfinance.com. We have articles on all kinds of topics. If there's a topic we haven't covered, but you would want us to cover, send us an email at hello@cleverwellfinance.com. Do a search on the website. We have hundreds and hundreds and hundreds and hundreds of articles. This is a blog that has been 7 years in the making. We have 13 writers that are writing on this site every day. So there is a lot of content. There's likely an article for a question that you have on there right now. So please stop by and visit our website. Follow us on Instagram. Check out our Facebook group. And then hit the like button here. Subscribe to our channel. I think my caffeine is getting to me. Do you want to add anything, Yazmir?
I just want to say thank you all for joining us. I hope that you find our topic today very helpful, whether you already knew this or you learned something new, inspires you to look at your financial plans and sticking to them. And we'll be here next week. I hope you can join us then.
Yes, we will see you next week. We appreciate you so much for being here, and we will talk to you soon. Bye.